Hello, everybody. Mike and Corinne here from Sawgrass. We were having a conversation the other day, and we've been out just networking with our investors. That's a lot of what we do. And a few people that have never invested said, "What's a syndication? How does it work? What is involved in it?" And I said, "Mike, we just need to sit down and explain this at a 101 level." So we just wanted to take a couple minutes and provide a little education. So Mike, I want to, just ask you a couple questions. You're very well articulated in this space, and maybe you can just kick us off with talking about what a syndication is and how Sawgrass does them.
Sure, yeah, happy to, Corinne. I think at its simplest, a syndication for Sawgrass, which would be defined as a general partner in the syndication, is purchasing assets using passive income from investors, right? So not going necessarily to a bank or the SBA to get the capital, but working within an investor network to use their capital to go purchase, whether it be a business or real estate or whatever you want to buy. And then we assume all the work around it. So our job is to go find the property, find the real estate, find the business, underwrite it, build the syndication structure, basically do all the work. And then our investors, we're using their money. That's as simple as you can put. We're using their money to accomplish a goal. They get a specific return off it. We get a specific return off it. And the idea is it's a win-win for everybody.
I love it. And it's a nice tool, for people to diversify rather than just the stock market or your checking and savings. We do both mobile home park syndications. We've done some franchise syndications. Does the syndication vary based on business type?
Yeah, there's all kinds of different syndications. And I think from the investor's perspective, the benefit is you're going to get involved in activities you either don't have time for, i.e. you'd want to buy a business, you just don't have time to run it. You don't have the education on how to do it. Like, I'd love to do it, but I don't know how. Or you don't have the capital to do it. Like, if we go buy a mobile home park, it might be $1 million, $1.5 million, $2 million, $3 million to buy the park. And somebody just doesn't have that kind of money sitting around to go do that. But they've got 50,000 or 100,000 and they can put it to work. So when you look at it from a general partner, limited partner, those are the benefits to actually doing a syndication. And then as you're looking at different syndications, yeah, there can be many different ways to do it and structure it. Some syndications will be more fee heavy, where the general partners will get management fees and liquidation fees and asset management fees, and just there's a lot of different fee structures. While other syndications, it's more of an equity share, where there's really not a lot of fees, and you really split the profit of whatever you're running, whether it be a business or a piece of real estate. And we've done both. We've had syndications where we pay out more of a preferred return or a guaranteed return to investors. And in those, we did have some fee structures that we collected. And then we've had syndications where the business really couldn't afford a preferred return because it was a startup business or it was a fixer-upper piece of property. So we just turned it into a cash split syndication where we take a chunk of the free cash flow, the investors take a chunk of the free cash flow. They win, we win, they win kind of strategy. So there's no one way to look at it. I think from an investor's perspective, you just got to be comfortable with what that particular syndication is doing, both from the industry you're syndicating, and then the structure of it, the time period of it, and the projected payout of it.
I love it. You actually hit on my last two questions, so I'm going to throw a curveball at you. What would you tell somebody who is maybe presently considering an investment with Sawgrass? We have different investments that pop up now and again. What would you tell somebody as they're evaluating us as an option?
Yeah, it's not a quick answer.
Take whatever time you need.
I think when you're looking at syndicating, the first thing I look at is syndicate with things or people or groups you know, like, and trust. Now, that doesn't mean you've been friends forever, but either through referrals, other people have worked with them, or you've had experience with us in the past. Like, a lot of our investors come from our network of prior work we've done, and then they've brought along, their friends, their family. So our network has grown. So I think trust, is a big thing. I would really vet the industry of whatever's being syndicated, because we do both real estate and uh, business syndications. Doesn't mean you have to be an expert in that industry at all, but I would vet the industry and make sure you feel comfortable that it's a good asset class, it's a growing asset class that the syndication's in. I would feel or encourage you to feel really comfortable with the pro forma, the analytics behind the syndication doesn't make sense. Some syndications will talk about multiples of investment is how they measure it. Others will talk about IRR, lots of different ways to measure it. But does it seem measured, right? Does the year over year over year over year growth seem realistic? So I'd make sure that that has been vetted. And then the not necessarily the fee structure, but just vet, how do the general partners make money? Because it is okay for the general partners to make money, right? That's why they're doing it. But most important, how do the limited partners make money, or the investors? Do you feel like the syndication prioritizes the investor? And that's something at Sawgrass we talk a ton about. The phrase, I'll use and many of us use is, how do you put the investor or give the investor a seat at the table? And it starts even when we're underwriting. Okay. Why would an investor want to invest in this? How do they make their return? What time period do they make their return? And then, the wealth, the equity gain, how do they make their return on investment? We compare a lot to the street. So like, if somebody would invest in the stock market, how does that compare against what we're doing, right? So those are just things I would look at before you decide, yep, that's a syndication that makes sense. And then the last thing I'll tell you, Corinne, that I would suggest, if it's your first syndication you've ever done, and let's say you got a couple $100,000 of investable income, maybe not invest all 200,000 in the first syndication that comes along, right? Go in at the minimum level just so you can see what it's like to work with that group. And then as more syndications come, you feel more comfortable to invest at a higher level. So just all things I'd be thinking about if I was doing my first syndication.
I love it. And that's how I got started, with my first syndication. Dip your toe in the water and you go, man, this is kind of cool, kind of fun. And here we are. So
Yeah, it's a great way to get money working for you.
yeah.
Where you're not having to do the work, right? So that's why I say you find business concepts you trust, you find syndicators you trust, and now you're putting that money to work, but they're the ones doing the work, getting that return for you. So I think it's a pretty cool way to increase wealth with not a lot of output from the investors. It's more money versus time.
I think this is fantastic. I love providing education, and I think it's one of the questions that have come up more recently. So thanks for sitting down with me, Mike. And we look forward to working with any of you guys. If you have any questions, reach out. We're always working on something fun, and we hope to hear from you guys soon.
Take care.